Welcome back, Mark Schultz, Jim McCormick joining us this weekend. And let's talk about soybeans because we've had a tough couple of weeks. We've had a lower monthly close. Is the soybean market just trading supply, Jim, or are we also trading demand concerns there?
I think we're starting to worry about the demand. I mean, there's been a lot of optimism that we were going to get a trade deal with China. I think that was keeping the sellers at bay. With this week, the Trump administration essentially kicking the can another 90 days. I think it's going to take now you're going to get more and more demand worries, Michelle, because the real problem with this is President Trump likes to shake hands when he cuts the deal. The best opportunity for him to shake the hands of Xi when the deal's cut will be at the APEC summit, which is right there, October 31st and November 1. So if it takes till that time frame to get a deal done and we do not get any commitments to buy beans from China, it's going to be very tough downward pressure, I believe, into the fall as the market just gets discouraged by that lack of buyer, which roughly takes about 19% of our beans year in, year out.
Well, Mark, if that is the case, we're going to miss our export window for soybeans, aren't we, with China?
That is correct. Jim is absolutely right. If we don't start doing the business now, the odds of getting that business back when it comes around November, December time period is going to be pretty slim window as well, because Brazil will likely be back harvesting beans and put them into the world market January, February of 2026. So you got to get some business done here pretty soon. And you're right. If you try to squeeze it all into a short window, that's going to be tough to do.
So, Jim, we're already under $10 on November soybeans. If we don't get that demand back, how low do we have to go?
Well, I think at least the near-term downward target could be around that 950, 960 level, which would have been the winter low of the November contracts. But could it get lower than that? It could. I mean, it kind of depends on how bloody this fight with China gets. I mean, remember back in the first trade war, you pushed beans down with an 8 in front of it. And, part of this in negotiations for trades getting much more complicated, especially now that President Trump is essentially demanding that China doesn't buy crude oil from Russia, which is a major provider of energy for China. So, these negotiations are not going to get easier potentially. They could get more complicated.
Yeah. Speaking of trade, Mark, we had a lot of frameworks for trade announced going into the August 1st tariff deadline, but the market failed to move at all. Is it just because the market wants proof? We want to see bushels first?
Well, I think they want to see at least some chatter about agricultural products being purchased. Opening up the door, you may have Australia going to buy more beef. Well, that remains to be seen. UK opening up. But, what we have for deals are still countries that's not a lot of purchasing power that these countries are going to buy a lot of product. I mean, the 800-pound gorilla is still China. It takes a lot of other countries to make up what they typically buy. And if they're absent from this market, it's going to be difficult to make it up elsewhere.
Well, the one market that hasn't shown much sign of a slowdown, record highs in cattle futures this week. We had a little correction on Thursday, but Jim, these reversals never hold. So is the top in, or are we even getting close?
You never know. Is the top in? It could be put in. It could have been put in on Thursday. Keep an eye on the longer term moving averages, like the 10-day moving average has been held consistently. But, if you look at the seasonality, Michelle, we're at times where we should be looking for the top. The box beef is showing signals of weakness. Remember, all these tariffs that Trump is putting into place is roughly a 15 to 18% tax. That is a consumption tax on the American producers, American consumer. Remember, there's something like 3 out of 4 Americans are already living paycheck to paycheck. These increased tariff costs, which usually get passed on, is going to put even more of a pinch on that consumer. And I think eventually that's going to force them away from the beef market. Just look at what you see advertised right now. When you watch what's going on at McDonald's, they're not advertising beef, they're advertising chicken, which tells me which way they think the consumer's going.
Yeah. And now we have this 50% tariff on Brazil. We'll see what impact that makes as well. Well, Mark and Jim, thanks so much for joining us this weekend. We'll have more U.S. Farm Report coming up.
All right. Thanks, Michelle, Jim, and Mark. Now, when we come back, we'll catch up with Machinery Pete and a slick crawling Oliver Kleetrack.